will come back to help her dad. Is $1 million enough to retire in 2023? That's the question we're tackling today, and it's not as straightforward as you might think. While many people consider $1 million the golden ticket to retirement, the reality is that it's a complicated issue that depends heavily on your individual circumstances. We're going to give you an honest assessment of what $1 million can realistically provide in retirement in today's economy. T's start by understanding the 4% rule, which suggests you can withdraw 4% of your savings annually, adjusting for inflation. This rule is based on backtesting historical market data, but it has limitations. We're currently in a low-interest rate environment with high inflation, especially prominent in 2022 and 2023. This erodes purchasing power, and there's also the risk of living longer than expected, as well as market volatility, which can significantly impact your returns. All these factors can lead to the 4% rule failing you in today's world. It's critical to assess your individual expenses with a detailed breakdown of your monthly and annual costs. Consider housing expenses, including mortgage or rent, property taxes, insurance, and maintenance. Don't forget healthcare costs, food, transportation, utilities, entertainment, personal care, debt payments, and those unexpected expenses that always seem to pop up. Remember to factor in inflation's impact on each of these costs and estimate your future expense needs. Flatiron is the silent killer of retirement savings. It's a general increase in prices and the fall in the purchasing value of money. We've seen high inflation rates recently, particularly in 2022 and 2023, which reduces real returns on fixed income investments like bonds and savings accounts. To mitigate this, consider investments that outpace inflation, such as real estate, commodities, and inflation-protected securities. Also, be flexible with your spending habits and consider part-time work. Cation plays a huge role, as the cost of living varies significantly by region. Factors influencing this include housing prices, taxes, state income tax, property tax, healthcare costs, and transportation costs. Consider whether relocating to a lower-cost area makes sense for you. Healthcare is a major retirement expense. Understand what Medicare covers and what it doesn't. Look into supplemental insurance options like Medigap policies or Medicare Advantage plans. Also, plan for potential long-term care needs, whether through insurance or self-funding. Remember, healthcare expenses tend to increase as you age, so estimate accordingly. Social Security and pensions are other important pieces of the puzzle. Estimate your Social Security benefits based on your earning history and determine your pension income, including any survivor benefits. However, there are concerns about the long-term solvency of Social Security and traditional pensions, so consider these as supplemental rather than primary income sources. Think about alternative income streams as well. Part-time work like consulting or freelancing, rental income from properties, and investment income from dividends, interest, and capital gains can all supplement your retirement savings. Downsizing, selling your home, reducing expenses, and investing the proceeds can also provide a financial boost. Your investment strategy is key to staying ahead. Diversify your investments across different asset classes like stocks, bonds, and real estate. Assess your risk tolerance to understand your comfort level with market fluctuations. Create a portfolio allocation that balances growth and income based on your risk tolerance and retirement goals. And remember to regularly review and adjust your portfolio to stay on track. And forget the emotional side of retirement. You might experience a loss of identity and purpose, boredom, isolation, or financial anxiety. Develop strategies for maintaining your mental and emotional well-being, such as pursuing hobbies, volunteering, staying socially connected, and seeking professional help if needed. Conclusion: $1 million can be enough to retire, but it requires careful planning and realistic expectations. Consider all the factors we discussed: expenses, inflation, location, healthcare, and alternative income. Don't rely on outdated rules of thumb. It's best to consult a financial advisor to create a personalized retirement plan that fits your specific needs. Thanks for watching. See you next time on Help or Dad.